Good afternoon, everybody.
Good afternoon.
Forgot what I was going to say next. Thanks for joining us. This is the June 5th, 2003 installment of the Social Security Open Forum, where advisors have the opportunity to ask us any questions that's on their mind. Advisors control the discussion, and Jim answers all the questions, because I find out the questions we get during the open forum are questions that are more apt for Jim to answer than myself. Anyway, thanks so much for joining us today. Appreciate you all being here. It's a beautiful day in Cincinnati, Ohio. I don't see a lot of blue skies, but it's warm. I don't see any rain. Jim, what's it like in your neighborhood?
Pretty much the same, little hazy. They say, I guess that's from maybe some fires in Canada or something, but hazy and warm, but not as warm as it was. So I'm happy.
No doubt. When are you going to mow your lawn next?
Hey, it hasn't grown much in the last week, so I might get a little reprieve here.
Good for
Might be
you.
a few more days.
All right. We don't have a really big crowd today. Looks like we have about 21 advisors on this open forum. So I'm just going to basically go down Hollywood Square type of setting and call on you. So I'll start with Sarah. Hi, Sarah.
Good morning, everybody.
Howdy. What's on your
Hi
mind
there.
today?
I'm sorry?
What's on your mind today?
What is on my mind today?
Social Security wise.
Right. Thanks for specifying.
Mm-hmm.
We haven't had too many client questions lately, so not really anything top of mind. Just real happy to be here, and I get a lot out of these open forums because it's a lot of case studies from different advisors. So I really appreciate being here. Thank you for putting these on.
Welcome, sir. Thanks for being here. We'll go to Teresa from Pittsburgh. Teresa, how are the Pirates doing?
Actually pretty good right now. They have the best winning streak in baseball right now.
What is the winning streak?
Right now it's, I think, 6 games.
Okay. Congratulations.
But whatever.
Yeah.
I don't have any questions today either. I'm just tuning in to listen.
Less so when I clients.
Go ahead. Teresa?
Oh, I said I don't have any questions today. I'm just tuning in to listen.
Okay, thanks, Teresa, for being here. I appreciate it. We'll go to Brian. Now, Brian, you can ask that stop and start question.
Yeah, I need more coffee today, but let's just assume that the client starts at 67 at his FRA. He goes with benefits for a year, then stops, and then he goes, waits 1 year, receives the 8% delayed retirement credits, and then starts again at 70. I'm just a little confused on which number we would be landing on in terms of his benefit. Would we be using the 67 and then add the 8%, or do we somehow move forward and use a higher benefit at age 70?
Well, Jim, I'm going to make a stab first. I think I'm right. So basically, you'll take the benefit he or she is receiving. And then when you increase for DRCs up until when the person begins again. So he or she will get close to get back to PIA, but won't exactly make it there. If he or she waits to 870, that is. Jim?
Yeah, that works. First of all, even if they began benefits before full retirement age, they can still suspend at full retirement age, and they get that 8% increase. In that case, it's definitely against what they're receiving, not against the PIA, versus that they filed at full retirement age and stop a year later. You could still apply it towards what they're receiving, because what they were receiving was their PIA. But you just count whatever months they didn't receive a check. That's what months that'll be used in the DRC count for the increase.
Okay, that's what I thought. Thank you.
Okay, thanks, Brian. We'll go to Bob. Hi, Bob.
Good afternoon. Hey, I got a client that turns 60 full retirement age, 66 and 6 months, March of next year, and she's going to file. When's the soonest that she should contact or can contact or should contact the Social Security Administration to turn her benefits on the day she turns 66 in 6 months, her full retirement age?
She can file up to 4 months in advance. So if she'll be 66 in 6 months in March, she could file as early as anytime after November, starting with November 1st. I would say don't file any later than probably sometime in January, if she wants to get her check on time. And remember, she won't get her first check until April,
Right.
but she can file as early as November 1st.
Okay. Fabulous. Thanks.
Yeah, 4 months in advance is when you can file for Social Security benefits. My benefits began in June of last year, and I filed on February 1st of last year. All right, we'll go to Doug. Hello, Doug.
Hey, good afternoon.
Artie, what's on your
Uh,
mind?
A little bit of the same along the lines. So let's use you. And so if I understand, some of the conversations that have already occurred here, let's say that, you win the lottery and you say, holy cow, I think I'll hold up for a couple of years. Even though you've already drawn for a year, what I understand then is if you wanted to suspend benefits for the next 3 years and see that roll up at 8% each year, you could exercise that choice, correct?
Yeah, it's a voluntary suspension. So
Okay,
I contact Social Security, tell them I want to suspend my benefits, and they'll suspend. I'll earn 2/3 of 1% per month for DRCs up until when until I turn my benefits back on. And since I'm still within the 12-month time period, I could still utilize the do-over.
Yeah.
So the do-over for me will end on June 30th of this year, of this month. So of this year. So if I wanted to, I could utilize the do-over by June 30th, but then I'd have to ask Jim for a loan to pay my benefits back.
okay. Want to go back to the first question of the afternoon and really clarify. And so I think you made reference that even if an individual, claimed early, that option to voluntarily suspend maybe for 1, 2, 3, or however many years, that is still available to the
Yeah.
benefit.
Anytime.
Okay,
Anytime upon reaching full retirement age, you can utilize the voluntary suspension.
okay.
Okay, Doug?
Yes, sir. That's
Okay.
good. Thank you.
Okay, David. Hello, David. You're on mute, David.
Muted.
Here you
How about
go.
now?
You're good now.
Good afternoon. How's everybody doing?
It's good so far. Thank you.
Hey, I don't really have any questions, but I am going to be taking my CE class right after our call. And the topic is Social Security disability. So
Good.
3-hour credit. So after that, I might have a question or two for the next call.
Okay, David, good. Who's putting that on?
Web CE
Okay, I
is
know them.
actually doing it.
Okay, I got
So
it. Okay. Thank you.
You
Have a good-
betcha.
Have a good time, David. Okay.
3 hours of my life.
Yeah, you won't
Yeah,
get it back
Good
again.
times.
All right, let's go to Chris. Hi, Chris.
Good afternoon, everybody.
Hello.
Just here listening.
Okay, thanks, Chris. Appreciate it. I'm going to pass Darlene because she told me she doesn't have any questions. So we'll go to Elisa. Hello, Elisa with Beacon Point. You're on mute. There you go.
I know, I just needed to find the unmute button.
Okay.
I do have 2 very good questions for you today.
Okay.
All right, first question. I've been asked about a client's daughter has cerebral palsy and how do they navigate SSI or SSDI? So I don't even know how old the client is, whether they're of Social Security age or not, but just tell me about what somebody would qualify for. Do they need to have a parent with the benefits turned on? What do you know about that?
Well, SSI doesn't need the parents to file. That would just be for that individual. Now, it's a needs-based program. So if the child's under age 18 and lives at home, the parent's income is going to count. She may not be eligible until she reaches age 18. The disability requirements are the same. SSI doesn't have a work requirement, but the disability portion of it's the same. So she's approved for disability for SSI, and it's before she's age 22. Whenever the parents file for their retirement, she'll be eligible for a disabled adult child benefit. If she's past 22 already, then they would have to go back and make a new decision. Was she disabled before age 22, before she could draw off the parent? Odds are she probably was. It sounds like something that is a lifetime issue. But so SSI, any other income or resources will affect your benefit. If you're on SSI, you're eligible for Medicaid, but not Medicare. If she goes on one of the parents' work records, her benefits 50% of the parent's PIA, and after 2 years, she's eligible for Medicare. If the amount is still low enough where she still gets Medicaid, the state will pay the Medicare premium for her.
Okay, so what if her parents are not in their 60s? What would she qualify for?
She would just file for the SSI at this point, or if she's not 18, when she's 18.
Okay.
So if they're not ready to file yet, she'll just file for the SSI.
Okay,
And she'll draw that. The problem with that, you know, if something happens where, let's say a parent passes away and they leave money to her, that money will affect her SSI.
okay.
Whereas with regular Social Security, the childhood disability, it doesn't. But she should file for SSI if the parents are not either of retirement age or just not intending on filing yet.
But if the parents earn any money, then that might disqualify her for SSI.
Only if she's under 18. Once she's 18, even if she still lives at home, she's separate from them.
Okay. And then SSDI is what she would qualify for once the parents turn their Social Security on.
Right.
Okay, got it.
They call it childhood disability benefits.
All right. And then I have one more question. We got a lot of questions from some people in the South region, talking about the probability of mandatory cuts to Social Security. And do you think that Social Security will ultimately be means tested, such as Medicare's IRMAA?
Well, since they're from the South, I'll say, hey, y'all, it's not likely that there'll be cuts to the benefits. Sorry. But means testing is a real possibility. What we're more than likely looking at, and this is just my best guess based on the proposals that have been out there, are the younger folks are going to see a full retirement age of age 70. They're going to increase the dollar amount that you pay the Social Security tax on.
Yeah.
At least go from 160,200, what it is this year, to maybe 250,000, or still cut it off at the 160, but it kicks in again at 400,000, something like that. They'll probably means test it in a way where they'll change how benefits are computed. So instead of 3 Ben points, maybe there'll be 5, or they'll put a cap on the AMI, the average monthly wage, which would lower the benefits for the higher earners, but not your normal earner, someone who wasn't at maximum earnings their whole working career. So there's going to be some changes. I think the full retirement age and what you pay the tax on are definitely going up, and probably changing how, adding the Ben points or a cap on the AMI. Other than that, I don't really see it affecting it too much.
Yeah, I told them the exact same thing. And I also don't think that they would completely change the system and make it means tested for people who've already been paying in for however many years. I think that if that were to happen, maybe they'll change it for people who are age 20 now, but like,
That's what they've always done in the past, is it affects people in the future.
yeah,
So I would expect the same, because if you go around cutting people's benefits, you're not going to get reelected. So I don't think they're going to cut people's benefits.
yeah. But even like for people who are like 40, I don't think that they would change it so drastically.
Well, it took 22 years to move full retirement age from 65 to 67. The first person that was affected, they passed a law in 83. It was, I think, 1990 before it affected anybody. And they went from 65 to 65 in 2 months. So yeah, even if it's sooner than we think, it's progressive in the way that they implement it. So it's not just one day the law says this and the next day it changes and you get hardly anything.
Right. Okay, thank you.
Sure.
I want to go to Matthew up on top. He did raise his hand, so I'll go to him now. Hey, Matthew.
Hey, everybody. I'm here in beautiful Pacific Northwest, enjoying a sunny 70-degree day with no humidity. So sorry for the rest of you.
Okay, let's go to somebody else.
Yeah, I can't hear what he's saying.
No. Go ahead.
Yeah. So back to the SSDI question. A representative payee in that kind of situation, are there limitations as to what they can do with the funds that come in for the disabled child, in this case, an adult child, but the parents are not at full retirement age yet? And so I just had a call this morning from somebody in Illinois who was wondering about what their limitations are in terms of what they can do with that money, because according to the rules I see, it looks like they're paying for present expenses, but they also have a mandate towards savings. So where can they put that saving?
Well, right. And first of all, you have to make sure that their needs are met. Their food, clothing, and shelter, all of that has to be met. Once that's met, if you want to save the money, basically you can save it pretty much wherever you want. There's not a limitation. You can put it in some type of interest-bearing account. You can buy CD. Oh, I don't know why anybody want to buy a CD, but you know, if the rates go back up, but whatever would be best. Investing it in the stock market now, that's not, you know, you don't want to put it in something that would be risky. But if you have something with a guaranteed interest to it, then that would be fine. But
they could also set up a special needs trust and transfer the funds in there.
Oh, sure, yeah.
Okay.
And there's plenty of attorneys out there that specialize in these special needs trusts, and so occasionally, particularly if it's not a parent, Social Security yearly is supposed to do a pay accounting where they'll say, okay, we gave you this much money, what'd you do with it? And you know, if I was payee for a 10-year-old and I bought that 10-year-old a brand new Corvette, that wouldn't be looked upon too kindly. But you know, if I paid school fees and even if I bought the child a TV for their room, or you know, stuff like that, as long as it's for the child because it's their money, then it's fine.
So do they not do accounting of parents then if they're the payee?
They do, just not every year, not as often, unless the child or the beneficiary goes in and says, hey, you know, my parents are getting my money and I'm not getting anything out of it. Then they'll do it at that point right away. But you know, if it's a child that lives at home, they know odds are food, clothing, and shelter probably is going to take up most of it anyhow.
Okay. Let's go to Lisa. Lysol, I meant to say.
Hi, I'm Liesel.
Lisa,
you're close.
okay. Okay.
So I have two questions. And the first one is I have a client who's on short-term disability, or maybe it's long-term, I'm not sure, but her income has changed drastically in 2023 from 2021 and 2022, where she took some additional retirement monies and had an income of about 160K a year. But in 2023 now, no longer working, no longer going back to work, her income's about 62,000. And she's getting hit pretty hard with IRMA. Is there anything we can do?
Yeah, I'd file the SSA 44, the life-changing event being, I mean, technically she didn't retire, but she lost her income
Right?
from her job. So I would file the request saying, look, my income was this, but it's now 60,000, which is under the, I always forget, I think it's 97,000 for a single person. And have them take a look at it. And you don't have to wait. I'd go ahead and do it as soon as possible.
Okay, she had mentioned that also. I don't think she's done it, but she had said something about having to have a doctor say that she was permanently disabled. And I guess she's not considered fully permanently disabled, but she is eligible for disability. And she isn't going back to work. Does that change anything?
No, she doesn't have to have a statement from the doctor. It might be helpful for them to see that, but
Okay,
the person in the office is going to make the decision. So what she's telling them is, I'm no longer working because of my physical condition. And if they need proof, they could always just go to the employer and say, okay, does that person still work here?
that's true. That's a
Yeah.
great point. Thank you so much. That's going to be real helpful. She wasn't expecting to retire so early. My next question, if you don't mind, hopefully isn't too complicated. I have a spouse that's been collecting disability for years and is going to be turning 65. So my assumption is that she's going to be transferred to, I guess, what you want to call traditional regular Social Security. I'm assuming her benefit, and I haven't seen the statement yet, will be higher with a disability than it was with the traditional Social Security. Is that true?
Yeah, she'll stay on the disability.
Oh, she will.
Yeah,
Okay.
at the disability amount, I should say. She'll be converted to retirement the month she attains full retirement age. But the
Got it.
dollar amount that she receives each month will stay the same.
Oh, it will. Okay.
Yeah,
That's helpful.
they're not going to go back, because particularly if she's been receiving it for a long time, she's had no income for many years.
That's correct.
And that may be why the difference in the disability amount versus the retirement. But they'll pay her the same amount of money. It's just
Okay.
out of the retirement trust fund instead of disability.
Oh, I see. Okay. Now the husband's 62. Is there any opportunity for him to claim anything with respect to her record?
Well, it depends on his, but if a spousal benefits payable at 62, he can draw off hers even if she's still on disability.
He can draw off that, but then he's also stuck with the spousal payment versus his own, or can he elect to take his own at 67?
Well, remember, deemed filing is going to apply to him, so he'll have to take his own first anyway.
You have to take his own first anyway.
Right.
Okay. All right. Great. Thank you so much.
Great. Thank you. We'll go to Gail. Hello, Gail.
Hi there, how are you guys?
We're good. Thanks. Appreciate you being
Okay.
here.
I've got another question in regards to the Social Security disability. I have a client who is on Social Security. He's 70, and he has a daughter who's 31 who has a child. She was diagnosed with bipolar, which I understand is a category that qualifies under the disability medical conditions. She works minimal amount, about $1,050 a month. Would she qualify for SSDI on her father's? And you mentioned, I wasn't aware of the Medicare, and then would her son be entitled to anything? He is 7 years old.
Yeah, son's not going to be entitled off of the grandfather in this case. She would only be entitled off his record if they could prove she became disabled before the age of 22.
Okay,
And if she has, since she turned 22, if she worked any period of time at all and earned that SGA level, then she wouldn't be eligible. But that said, it never hurts to ask. I always tell people all the time, don't assume, get an official determination from Social Security.
okay. So, and then she had the same diagnosis when she was a teen.
So it's possible they could find that, yes, she was disabled before 22 and then pay her off of his work record. But even if that happens, her child won't be eligible.
Okay, and then when does, I wasn't aware of the Medicare part. So if by chance she qualified for SSDI on her dad's record, What was the Medicare point you made earlier?
Yeah, Medicare is available to someone on Social Security disability. If you've been drawing benefits for 24 months or longer, then Medicare is available. If you have Lou Gehrig's disease, there's no waiting period. If you have end-stage renal disease, it could maybe be 3 months or so. But everything else, it's 24-month waiting period.
Okay, thank you very much.
Sure.
Thanks, Gail. Let's go to Don. I'm going to try to go around the squares again. So let's go to Don. There you go.
Yeah, how are you? I just have a very quick question as it relates to disability income. And I'm not sure if this number is accurate, but is there a limitation as to how much money can be saved in someone's personal bank accounts before Social Security starts to evaluate the need for disability?
SSDI, no. SSI, yes. But Social Security disability, other sources of income or resources have no effect. But if you have SSI, supplemental security income, that's a needs-based program that would be affected.
Okay. All right. Thank you.
Sure.
Okay, let's go to Mark. Hello, Mark.
Sorry, it took me a minute to unmute there.
It's okay.
So no, my questions for today were covered earlier. Just looking at, I'm getting a lot of questions about the future of Social Security and what adjustments might look like. So I think we've already touched on that. So other than that, I'm good.
Okay, thanks, Mark. Let's go
Thank
to
you.
the other Mark. Hi, Mark. Mark Goslin, you there? Okay, let's go to Josh. Hello, Josh.
Hey, how are you? I
Yeah, good.
don't have anything for today.
Okay, thanks, Josh. Let's see, George. George,
Good
Laura.
morning.
Hi.
Good morning. All good for right now. Listening in. Thank you.
Okay, thank you. Michael Clennon. Hi, Michael. Okay, let's go to Camille. Hello.
Hey there.
Never
Sorry.
mind.
I
Hi,
was trying to
Michael.
find the button.
Okay.
Just question. I just need clarification, and this is probably a simple question, but covered and uncovered employment when it comes to the WAP. Can you explain that?
Go ahead, Jim.
The elimination.
You're doing a good job, Jim. Go for it.
Yeah. Covered employment is basically wages that you pay Social Security tax on. So you work for someone, they withhold Social Security, you're self-employed, you fill out your taxes, you pay the Social Security tax. Non-covered earnings are jobs that you work where you're excluded from Social Security. You don't pay the Social Security tax. For instance, in Ohio, our teachers pay into their state teachers' retirement, but they were allowed to opt out of Social Security. So if they have other earnings, maybe in the summer they delivered pizzas or do, whatever they do in the summer, and they earn their 40 credits that way, then that's when the windfall will kick in. And it's because they look like they're lower earners, but technically they're not. But it's based on the fact that they work in a job where you don't pay the Social Security tax. Does that help?
So if they're getting a paycheck and their Social Security, as a line item, that's covered.
Yes.
Is that correct?
Yes.
So, and as far as how does that affect like postal, for example, do they pay into Social Security?
Yeah, any postal or federal government employee who was hired January 1st, 1984 or later, they're not under civil service, they're under FERS, Federal Employees Retirement System. Those folks pay Social Security tax on their wages, so they're not subject to windfall.
Okay, thank you.
Sure.
Okay, now we're here with Camille. Hi, Camille. Okay, we'll go to Ray. Hello, Ray.
Hello, I don't have anything for today.
Okay, thanks, Ray. Mike. Hello, Mike.
Good afternoon. Just a couple I know we kind of talked about the future of Social Security moving forward, but up until the last week and a half, with this whole debt ceiling issue going on, a lot of folks have started asking the questions. What happens what would have happened if there would have been no agreement, no deal struck? What would have happened to filing of Social Security benefits, as well as those benefits being paid out for individuals that were already receiving them?
Well, that's a good question. That's totally up to the folks that make the decisions in Washington, D.C. It is possible, but not very likely that people would not receive their benefits. When we've had issues in the past, not so much with the debt ceiling, but where they couldn't pass a budget and that kind of thing, people still receive their benefits. It was an issue getting new people on or helping people that were having problems. But for the most part, people do receive their benefits. They love to throw it out there to scare people, so they'll contact their representative and tell them to get on the stick. I don't see it as a likely situation, but you never know for sure. You just can't say absolutely that people on Social Security would still get their checks.
Thank you.
Thanks, Mike. Hello, Melanie.
Just
Hey.
listening.
Oh, okay, fine. Okay. Missy. Hello, Missy.
Hi.
Hello. What's on your mind?
Oh, nothing much. I did get one client who did the life-changing event form,
Yeah.
and they said really smoothly, and they got 15 to 16 months back.
Oh,
So,
sweet.
guys.
Good. Good job.
Never
Missy.
hurts to ask. Worst they can say is no.
That's right.
Doesn't cost you anything, so.
So thank you.
Okay.
That's all I
But-
got.
Thank you. Hi, Krista.
Hi, thank you so much. I had a situation where a Social Security office wouldn't allow a client to suspend. They were past their full retirement age, realized they wanted to suspend. They went in twice and the office just wouldn't do it. Do you have any suggestions? I said, we'll try a manager or maybe call in, but they were just struggling with the people they were working with.
Obviously not Piqua, Ohio, but that's terrible. I don't know why they would do that, but if that was me, I'd go visit my congressman and just that way you don't have to worry about dealing with the manager, the supervisor. If you're already at the office, ask to speak to a supervisor. But if it means going back in, I just go visit my local congressman's office.
Thank you. I will make that suggestion. I appreciate that. And then just to confirm on the disabled child's benefit, the only way that the child would receive that benefit is if the parents are currently collecting or have passed away, or would they
Right.
be able to collect something earlier?
No, either they're receiving retirement or disability themselves, or they passed away, right? The parent has to be either receiving a benefit or deceased.
Okay, thank you for confirming.
Sure.
Okay, Matt's up. Hi, Matt.
Which one? Is there another Matt besides me?
Yeah, there's another Matt besides you. Yeah, okay.
Okay.
Matt Oakes. Hello, Matt Oakes. All right, we'll go to Kelly. Hello, Kelly.
Hey, I just wanted to say thanks for everybody's questions. You guys have covered a lot of the things that I had, not specifically, but I appreciate this seminar.
Okay,
or
thanks.
this time.
Thanks, Kelly. Appreciate you being here with us too. Let's go to Greg. Hello, Greg.
Hi.
Hey.
I have a question. It's not directly pertaining to the Social Security rules, but I'm aware that Social Security redesigned their benefit estimate statements a few years back, and now when you look at the on page 2 of the earnings history, they'll consolidate an entire decade, mostly in the early years, they'll consolidate the entire decade and put the sum total of the earnings there. Well, it makes it really difficult to run any kind of a social security analysis on software, because you have to input actual year by year. So I'm aware that the client can go in and set up a My Social Security account, and then they can retrieve their earnings record, but sometimes it can be a hassle. I'm just wondering if you've heard of any plans on redesigning that again, or giving us back the old format.
I haven't heard anything where they're looking to change it. They actually started that shortly before they went to the new format. I remember seeing a few of the older format records that were doing that. Yeah, it is. I agree with you. It is a pain. If you do have the My Social Security account set up, you can get it that way. Or if you don't want to set that up, you can call the Social Security office and get a printout. The printout, it's called an SEQY. It lists the earnings year by year. It's just like the earnings statement you get from your record. It's just you got to call the 800 number and then wait for them to mail it to you. But you still can get it without the account, either by calling or visiting the local office.
Right. Great. Thank you.
Okay, but you know, the information is there. Just takes a little digging sometimes to find the right document there. All right, let's go to Roderick. Hello, Roderick.
Hello, everyone. Just listening in and learning. We're learning a lot of information. Thanks a lot.
Yeah, I'm learning too.
All right.
Hey, Joseph. Hi, Joseph. Okay, seems like we're done with going around all the squares. If you have any more questions, go ahead and raise your hand and we'll get right to you. Jim and I always have questions that we can run by everybody. But before we do that, let's go ahead and award two $50 gift cards. So Jim, I need two numbers between 1 and 31.
Well,
and this time I'm going to count backwards.
Yeah, well, then I'll go
from
1
the
and
bottom.
2. 1 and 2. No, I'm just kidding. Because that'd be us, right?
And no, not really. Ours would be like, if we're going forwards, would be 2 and 5. But I'm going to start at the bottom. So
let's go with 25 and 17.
Okay, let me see what we got here. 8, 9, 10, 13, 14, 15, 16, 17. Josh Silverman.
Hey, awesome.
Yeah. Well, after the booking fee, we'll see how much you end up. But
Yeah, exactly.
you get something. Wait, you just moved on my screen.
Maybe I'll get the next one too.
I don't understand. Well,
Yeah.
I'm going to go Sarah. Something happened, but I'm going to go Sarah. Sarah, you also win a $50 Amazon gift card. Okay, got it. Okay, anyway, so Jim, let's talk about that restricted application. We need to bring that up.
Well, before we do, we got a few questions. or
go
at
for
least
it then.
one
I'm not
question in the
looking.
Chat, maybe
Okay,
two.
go for it, Jim.
I don't know if I want to answer this one, but somebody is saying they had a client had 2 patients from Germany and was subject to windfall. She appealed that, and he got it's Matthew Atkins, got a call over the weekend that apparently her appeal was approved. They refunded her everything they had withheld. I'm not sure why they would have done that. Hopefully they explain that in the letter, but it states clearly in the agreement with Germany that that windfall would apply. So not sure exactly, unless maybe she had the 30 years or something, but yeah.
She just called me. She just called me while I'm on this call and left me another message. I tried to call her back right before this forum, so I didn't hear back, but I'll give her a shout and I'll email you and let you know what they said.
Okay, yeah, hopefully they didn't say, oh, that was a mistake. You got to give us the money back we just gave you. And I laugh when I say that, but that's happened before. So hopefully that's not the case. Let's see. Question regarding provisional income calculations. Are pension payments and annuity payments included in provisional income? That was from Brian. I believe it would be. What do you think, Mark?
I wasn't, sorry, I was
You
looking at
dreaming?
looking at some questions. Sorry about that. Go
So
ahead,
pension
Jim.
payments and annuity payments, that would be included in your provisional
Oh,
income.
it is.
Yeah.
Anything that's included in AGI is included in provisional
Yeah.
income, pure and simple.
All righty.
There might be
That covers
situations.
them.
Yeah, there might be some situations where something's not included. Annuity sometimes you gotta partial that out between principal coming back and income coming back, but that's what your tax preparer will determine.
Thank you.
Hey, Jim, let's talk about totalization agreements. If somebody's working in the US and then they go outside and they work for a country where we do not have a totalization agreement, I guess they're going to end up paying FICA taxes and Social Security tax on all their income in the US and out if the country they're working in has some type of pension program going, and they might just qualify for their own for benefits in two different places. Am I right on that?
Yeah, I mean, even if it's countries we have agreement with, if you got enough work under both countries' agreements, you can draw both pensions. The US pension and the foreign pension, the German pension. If we have an agreement, it's subject to WEP. If we don't have an agreement, it's still a foreign pension. If you didn't pay Social Security tax on it, it's going to be subject to WEP. If you ended up paying it on into both programs, then it wouldn't be subject to WEP. But so we would have to look at that.
Okay, Jim, have you taken a restricted application over the last 2, 3, 4 weeks?
No,
When was the last time you took a restricted app?
I can't remember the last restricted app I took. It's been months and months.
Wow, isn't that amazing? So still it applies for any client if you're born by that magic birth date of 1/1/54. I won't have to say that too much longer. After all, this is already June 5th. And by the end of 2023, the restricted application kind of goes away. Sorry to see it go though, right, Jim?
Well, yeah, I like that. I thought it was a great strategy for folks. And when they did away with it, I was not happy, but they didn't ask me, so.
Yeah, when you were able to combine the claim and suspend and with the restricted application, both strategies together, that was really a very powerful opportunity to really get more money out of the system. So years ago, when both were available, we'd have the husband would maybe file and suspend. The wife, if she was at her full retirement age, would file a restricted application off his work record. Since he established his record, she could file a restricted app, even though he's not receiving a benefit. So, boy, when we taught our class back before 2016 or so, we spent a lot of time talking about how do you coordinate and do both of those strategies together. Okay, Jim, what types of questions have you received lately?
I kind of like today, I've been getting disability questions. A lot of times about disabled children. As a matter of fact, I have a consultation shortly after we're done here with a couple that are old enough to file. They're trying to decide what they should do, and they have a disabled adult child. The question with their child is, was she disabled before age 22? She's on SSI, but started getting it after age 22. And so Social Security's saying now, well, she's disabled now, but she wasn't before age 22, and she's got an appeal going. So their question is, with things that we do now, what can we do to protect her if once they go through civil court, if she's approved? And we just want to make sure that when they apply for benefits, they go ahead and list her on the application. That'll protect her. The mom is thinking about filing now. She was full retirement age in January, so we can take her back to January. And if she does, she'll just draw on her own. The child won't draw at this point, but we would still list her on the application. And then if eventually they go through civil court and the court says, well, of course she was disabled before she was 22, then she's protected. And she would get, if it took 5 years, they go back 5 years and pay her 5 years worth of benefits. So that always, like we were talking about before, make Social Security make the determination no matter what it is. Don't assume that you're not eligible for this benefit, or if I file the SSA 44, it's just going to be denied. You never know for sure. And it just never hurts. So we want to make sure people don't lose any money in the long run and go ahead and file. Some of the other questions, been getting a few questions about the earnings test. Earnings test does not apply to disability benefits. They have their own requirement. So if you're drawing SSDI and you're getting a severance package, or if you're getting long-term disability, it's not going to affect your Social Security disability benefit. If you're receiving workers' compensation, however, then there is a limit. So if you're drawing Social Security disability and you're getting workers' compensation, between the two, you can't draw any more than 80% of your average salary. This is a real mess for a couple of reasons. One, figuring out the average salary, and Baltimore does that, so it takes forever. And the other is workers' comp tends to come and go. So somebody may be on workers' comp and their Social Security is reduced, and then the workers' comp stops, Social Security goes up, now it kicks back in again. So it's supposed to go back down. Some states, workers' comp is affected because you're drawing Social Security. Other states, Social Security is affected because of the workers' comp. It just depends on where you live. So it's a huge nightmare, but it's one that's going to continue. It's just going to be a pain for a while.
And Jim, you answered a question here. Let me read it. You answered a question about a questionable notice about Medicare Part B eligibility. Can you explain that, please?
Well, yeah, this was a little weird. Somebody who was not insured for Part A, they must have inquired at their local office about eligibility for Part B. And the letter that they got back from the local office just said, you're not eligible for Part A because you don't have enough work, and you're not eligible for Part B. And it said something about you didn't have credits between 30 and 39 credits, so you're not eligible for anything. Well, that's not right. If you never worked a day in your life, you can still get premium Part A. It's pretty expensive. It's $4.99 a month, but you can still get premium A. If you get premium A, you must have Part B. And it's, it's still the same price, $164.90. And this is where the 30 credits came in, the best guess I could come up with. If you have between 30 and 39 credits, even though you're not insured for premium free Part A, you get premium Part A, but it's only $274 a month instead of the $4.99. So one of the deals where if you're close, they will give you a discount on the premium Part A. And pretty much, if you're a U.S. citizen, age 65 or older, you're eligible for Part B. If you're not eligible for Part A, you can still take Part B. So not sure why they told them that. I looked around just to be sure. I couldn't find anything in Palms about it. So yeah, that one was kind of an odd one.
Jim, talk about this other question, appeal for annual versus monthly earnings test.
Well, yeah, when Social Security does the earnings test, first thing they're going to do is look at the annual earnings. If you're not over the yearly amount, this year, the 21,240, they don't care what you earn in any one particular month. If you have a couple months where you go over the monthly amount, doesn't matter, you'll still get all your checks. If you go over the yearly amount, that's when you may need to use this monthly test. The monthly test says any month you earn $1,770 or less, regardless of what you earn, will pay you anyway. You could only use this monthly test in 1 year. Most people use it their first year of retirement, but not everybody does. I mean, for instance, if you retired December 31st, you don't need to use it to get checks starting in January. But if you retired in July, they look at your earnings January through December. So what you earn January through June could affect your benefit. That's where the monthly test comes in to be. And it's just, first we look at the annual amount, and then if we can use the monthly test, or if Social Security can, then they will, or they should.
Jim, how about retroactive benefits when it comes to a surviving spouse situation?
Well, if you're past full retirement age, the same rules apply. If you're not full retirement age, there is up to a month of retroactive benefits available. So someone passes away, as long as you file for the survivor benefit by the end of the following month, you can go ahead and start the benefit in the month that the person passed away. So they know, well, for one thing, somebody might pass away on the last day of the month. Is what's on the top of that survivor's mind? Ooh, I better contact Social Security. No, that's the furthest thing from their mind. So that's why you have that option in there.
Yeah, I see something here in the chat. Apparently Germany and the USA have a totalization agreement that exempts people from WEP. Do you, Jim, agree with that?
Well, I'd have to look at the agreement. I don't recall seeing that, but if that's what they're saying, I mean, if they gave that money or lady her money back, must be, but that's something we'll have to look up. And
I called her
the agreement.
while we were on the call.
Okay.
I called her back and she said they have an interstate agreement. And so she was actually eligible for her civic pension. And then also she was eligible for OAP because she had a combined years of work of 45 years in the US and Germany. And Germany had actually told her that they had an interstate agreement and she shouldn't be subject to WEP. And when she appealed it, that's what they came back with.
Well, that's interesting. I wonder if that's something new that they renegotiated, because it's a pretty old agreement between the US and Germany. So might be something new. Interesting that nobody in the US, that includes me apparently, didn't know about that. But the Germans did. So good for them, and good for them for telling her. But yeah, we'll take a look at that agreement and see if maybe they made a change there.
Jim, another question. If someone is on SSI, do they qualify for Medicare? That was one of our chat questions.
Yeah, SSI does not qualify you for Medicare. You will be eligible in every state. You meet the income requirements for Medicaid, but not Medicare. SSI is not connected to Medicare at all.
Next one, question that you've answered through email. Talk about the how you want to correct your earnings record. Is there a difference between earnings within the past 3 years, 3 months and 15 days versus longer than that?
Yeah, current earnings, Social Security will help look for. They'll look into their records to see maybe it was reported under a wrong Social Security number or name, and they just put it in the suspense file. And they'll look and try to find that for you. After 3 years, 3 months and 15 days, basically you're on your own. If you have your documents, they'll change it. If you don't, they won't. And so it's just up to you at that point.
Okay, I'm looking for others. Feel free to
I did
answer
have one about Part
Go for
A retroactive, and because you know that if you have Part A of Medicare, you can no longer contribute to your HSA. And so the advice is to stop your HSA 6 months before you file for benefits. what and I got an email from someone, I can't remember who it was now. They said the Social Security office told them to appeal it. They filed for benefits. They got the 6 months retroactive on their Part A, which put them in the IRS violation for the having contributions to the HSA. And so the people at Social Security told them to appeal that, and I wasn't aware of that. So I did some checking, and no, they're going to go back as far as they can go, up to 6 months. If you meet all the requirements, they still do that. And it's based on when you actually file your application. So one of the questions we had before, how far in advance do you file for your Social Security? You can file online up to 4 months in advance, but that also means if you're past age 65, they're going to back up your Medicare 6 months from that month you filed the application, not from when you elected benefits 4 months from now, but the fact that you filed in June for benefits to begin in August or September, your Medicare is going to go back to December of 2022. And they haven't changed that. So unfortunately, I wish they would. It messes with a lot of people. And the only ways around that is either stop paying into the HSA 6 months in advance, or since you can have up to 6 months of retroactive benefits if you're past full retirement age, you might have to delay filing. Wait 6 months from when you wanted benefits to begin. That means they'll back up the Medicare 6 months, and they'll back up your pay 6 months. But that's kind of a rough way to go.
Jim, let's one final question here from an email. On April 7th of 2023, you helped me fill out an application and switch my benefits currently off my wife to my own. I turned 70 in August. When I checked my Social Security page, they show they received it and are reviewing it. They said it would take 2 to 4 weeks. That was 6 weeks ago. They have not contacted me by phone or letter. What should I do?
Yeah, what they do in this case is they sit on that application because you're getting benefits. If they went ahead and processed his age 70 application, that would stop the spousal benefits. So what they'll do is they just put it on hold until the process is done to pay him the last spousal benefit that he's due. Since he'll be 70 in August, he'll get his last spousal check in August for July. So once that is processed for payment, then they'll stop that spousal benefit and process his own. So he's going to have to wait a while before he gets sees that's been processed and gets his letter.
All right, folks. I don't know if we have any more questions here. Let's see. One more. What is the process if a client has missing years on their statement? Mailing tax return to Social Security?
Well, your W-2, if you have your W-2 form, if you're self-employed, then they need your tax return, specifically the Schedule SC, but they usually want to see the whole return. You can mail it in. I think I would take it in. No guarantee how long before you get it back, or even if it gets lost. So
agreed.
Take it into your local office because they can fix that record from the local office.
All right, folks, that ends the open forum for today. Thank you so much. I believe we're going to be back in 2 weeks. It's whatever the schedule is, and I believe it starts at 2 o'clock Eastern time again.
Yeah, I think we put it on a different day.
Oh, is that the one we moved? Okay, that's fine. Well, check the schedule, check the emails I've sent out. It was all in the newsletters I've sent through Constant Contact. All right, folks, thank you for being here. Take care. Bye.
Bye. See you.